Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. And it has been a day like many others so far as I zoom into our execution chart real quick here. And what does a day like many others imply is you have that initial drive one way, and in the case of this particular market, quick action to buy the dip. So it's actually becoming strange at this point. I mean, obviously it's been strange in many ways. This is the second longest consolidation, or nearing the second longest consolidation in all of history. We've hit the third. We are at about, I think, 200 and between 220, 230-ish days, and at 240 something, somewhere like that. I'll have to double check my sources here, but we reached that second longest consolidation in history. So very irregular, yet really the thing that I'm noticing most, I'm going to go to the warm-up document here real quick. We're going to fill in some stuff, is principally the idea that we're getting a lot of open drives lately. So if I go to the Fabio trade log here, on the days that Fabio does get trades, which has actually been fairly seldom recently, if you just look at May, you're seeing a lot of these open drive, open test drives. These are supposed to, look at this, since the 27th, every trading day that Fabio has had, and a few that he hasn't had, has been either open test drive or open drive. And keep in mind, these are super high probability opens, so especially those open drives, you very rarely see them get unwound. And we've been seeing them get unwound more times than not recently, which is just kind of another weird thing that's happening with this market. Keep in mind, it's the highest probability open. I do not have the specific probabilities on that, but I know that it's greater than 50%. I dare say it might be greater than 70%, but let's be safe and say greater than 50%, yet we haven't seen one follow through. In fact, I'm pretty sure every single one has been unwound in May. So that's something that keeps happening. We'll see if it happens today. What I got going on here, we go back to the execution chart just to show you what I've been doing so far today. I've just been doing that pass system. Oh, is it going to show us? That pass system that I will talk about more in a second here. You can just see those fills. Right now I'm just with this runner. It's not a runner that I want to have on, but the system says we keep the runner. So we're holding that till 44.25. I am giving it a little more room. So it's slightly beyond break even, cutting into some of those profits if we do get yet another unwind of this open drive. But it's becoming comic to the point of unbelievable at this point. The consistent unwind of these open drives. So we'll see if we can get the market to behave itself today, bounce from that same area, reclaiming that same area once again. I will say, to the credit of the crystal ball mechanisms, today we didn't really, in my opinion, didn't look anything like a trend. I was really surprised to see. Oh, thank you, Ernie. Sometimes it works, sometimes it doesn't. There you go. So let me show the order fills again. So I guess you didn't see, oops, what was that? Do not want to do that. Go. Okay, so everything I just said, I will, I guess I'll have to repeat because I need to keep my little program scene in OBS here Top right, thank you, Ernie, for calling that out. That would have been annoying if I had to redo the entire thing. All right, so we'll start from the beginning here. The open drive thing stands. You don't need me showing you charts. You can look at my twitching face to get that point across. Yeah, so these are what I got going on in the fields today. Really, nothing special. So I got that runner going. Hate it, but it is what it is. Got to abide by the system. What triggered that first entry was, so keep in mind, this is that pass system. So if you go to that routine trading folder that's in the description here, and you click on routine day trading, go to pass. It's just an adaptation of Adam Mancini's system, if any of you ever heard of him. And what that is you recapture a level, you take the trade to the next level, and then you take it off and leave a runner. So perfect example today. You saw this kind of double top pre-market. As soon as we lost this level here, so what I use is 5 to 8 points of acceptance. First tranche on at 5, second on at 8. When we lost that 45 level here at about 40, I got my first tranche on, and then the second at about 37, 38-ish. And then I took it down to first 29 and then the overnight low. And then I threw on a runner and we got that brief little retrace. So obviously we got more of a retrace than expected, but such is the extreme buy the dip regime nature of this market. So that's what I got going on just for the day so far. Again, watching this 44.25 level. This is the most important level for me today, because if and when I should just start saying when the bulls do completely unwind that really strong open drive and take us back through that 44.25, that's going to become kind of the major pivot. So it's already the major pivot for today, but the major, I think, supporting pivot for the bull case if it continues here. So we have entered a realm of ridiculousness, and so we might as well just embrace it and keep moving forward. So speaking of moving forward, we're going to go to the warm-up document now. If I can switch screens, let's make sure it works here and see what we got going on. So again, you had that up and balanced overnight inventory. We've been seeing a lot of that, either down and balanced, up and balanced. Nothing really crazy overnight, which is a big change from what we saw. I think it was in March where most of that action, in fact, pretty much that entire pullback occurred overnight. So you're seeing just a lot of that, drift, kind of neutral, balancing stuff out during the night, and then during the day, business gets done. And by business gets done, we don't really go anywhere. We just buy every dip and sell every rip and end up somewhere near 41.34. So you have that open drive there. Just point that out. We'll watch what happens around there. And right now the profile is looking rotational. We got that IBR of 20. Not great, but not bad. I'll take an IBR of 20 over 10. And I need to fill in the information here. So let's just do that for the expected move. Volatility is creeping up just a little bit in the SPX. So that's nice to see. It's just an OPEX thing going on here. If you look at the internals that were going on this morning, be it ADD, vol, SPD, whatever you want to use from our lovely internals, and most importantly VIX, you did not see that follow through. And I mentioned that at the beginning of the briefing here. You didn't see that follow through that would imply trend. So it's no surprise that the dip is being bought. I think the most surprising thing is just the strength of that open drive in the face of internals that did not expect anything big to happen. So we'll see if we don't just chop around here. Again, 44.25 is that main level, and you can see our other levels here. Most important are in bold. So lots of levels, lots of junk, super cluster type market. I will keep this document updated as the day goes on in case anything changes. Yet right now it looks like we're going to get another unwind of our open drive as we retest the open price here. So we'll see if that happens. I will go to the price action regardless and see what we got going on here. So let me get the order fills off this. Stand to buy. Okay. So TPO chart. Actually, I guess we'll start with macro again. It's kind of like what we saw toward the end of last week. Not really much to talk about. This is just about as ugly as it gets. The POC did move up for the year. No surprise. I mean, it's not really a huge development. So just kind of confirming that there is a lot of time and volume going on here, which 7 weeks of consolidating in the same freaking area will do. So that's what we got going on here. Really, all I want to talk about in macro charts are those gaps that you see right below 416 and right below 408. Actually, I believe that gap is about 407.20 on the downside. And then you got the one on the upside here right below 416. Until something happens on either of those gaps, we're just in this consolidation. There's really nothing to even to look at on the macro chart. So I'll be watching those gaps first of all. The first one being, let's get some real numbers here. If it'll show me my tools value window. Buy please. Go. All right. So that first gap is going to be 415.27, and that one on the downside here is 407.27. So 15.27, 407.27, and that's the party we're looking at here. So until either of those gets conquered, I'm not even looking at that macro chart. There's just nothing to see. Nice to see that the POC moved up, but again, it's not really a tradable action. So let me get rid of this time and sales real quick here. Okay. So what do we got going on the TPO, which is our more levels based chart, is you got poor highs at that overnight high and a poor low at the prior day low. So again, choppy chop until one of those gets taken out. So we see that poor high go. Really, again, we get above this 44.25. I'm going to be looking for that bullish continuation, just because when you do have an unwind of one of those strong opens, you do often see the continuation the other way. So I'll immediately be looking for that. We did have that nice cleanup of that ugly overnight profile. So we have a single right above 44.25, probably at about that 41.48 area. And that's kind of the first stop. And then again, at that poor high, if we take out the poor high, when we really start to go, I do think that we can see that breakout decently into this supply zone, in my opinion, if we do get above that prior day high, that overnight high from Friday. So right about that, above that 65-ish area, I think could lead to a nice breakout. Then the bottom, I think we may actually see some continuation through 4100 if we take out that poor low. So similarly to what we were seeing on the macro chart there, you have the gaps above, and now if you get a little more granular and you look a little more closely, you have these poor lows and poor high. Poor high at about 56, we'll say. Poor low at that prior day low. So overnight highs, poor high. Overnight low, or excuse me, prior day lows, a poor low. So two decent levels to reference there. Again, I'll chop in between, and that's evident with our volatility chart, which, again, I don't really see any point talking about. We are within a chop. We're chop within a chop, some might say, where you have our key levels of 24 and 1960, and now really between 2020 and 2180, we are also chopping around. Nothing really to see here, I don't think, until we either get below that 1960 or above at least 2180, which again, I think it's more of a price action environment, watching what happens at that overnight high from tonight, watching what happens at that 44.25, which is the unwind of the open drive, and finally watching what happens at that poor low at that prior day low. So really easy enough look today. I don't really think there's too much we need to talk about. Just kind of keeping the big picture in mind. It is OPEX, so there is a chance, I dare say, as Dumb and Dumber might say, just barely, but there is a chance that we may see some type of trend open up at some point this week. So we'll see. The bearish seasonality, if you believe in that type of thing, like you may believe in astrology, concludes, I believe, next week. Yep, next week concludes that bearish seasonality, which we haven't been seeing. So watch for that to express itself. Whatever algo still follow that sometime this week, and if not, I think an even more powerful signal would, if we did really start to squeeze and break out, we may see a nice little move. I think that once this junky tape does resolve itself, we're going to see a big move. I have no idea which way it's going. If I had a guess, I mean, you got to go with volatility. I would guess we have more upside, but I would put that guess at literally 50-50. I have no conviction here. I'm just kind of playing the signals as they come and watching to see if we can't get some clues intraday. So as I look at it now, I'm just taking one more look at our internals. I see nothing bearish, so I care about open drive way more than internal, so I stay bearish until that's unwound. But as soon as that does get unwound, you got plenty of bullish momentum under the surface here, I think, given the falling volatility, the strongest sectors of the market. Let me just make sure I'm not incorrect here. Yeah, the strongest sectors of the market are those high risk assets. So yeah, I mean, anything could definitely happen, but we definitely do not have that super bearish look for today. So I'm going to go ahead and conclude the briefing with that. So again, I'm just going to flash the warm-up document here and advertise. It's probably the wrong word to use, but promote, we'll say, those new mechanics. So if you go to routine day trading, you can see I'm building this statistic bank out, by the way. You see those feature statistics in the newsletter. I'm building this out to get it nice and cool. I got some interesting little notes here that I'm just kind of incorporating several years of that type of stuff that I'm going to put into that. And we're going to have a party. And if you want to party with the future strategies, you got the new one right here, futures price action scalps pass. That's written out there. All I care about is price action. Like I said, it's adapted from Mancini. This has been really good for me, keeping me from becoming homeless during this long consolidation. So if you're interested in checking that out, that is now updated in there. I'm not going to backtest it just because that would take forever. I don't even know how. I'd have to like do levels every single day. I don't even know how I would backtest that. So this is just going to be forward tested. I did put it in my little trade log here, and I did do a tweak. So I made 2,000 on Friday on it, but I made a little bit of a tweak that kind of have that from Friday. So if you saw my tweet, that's just because I made a little mechanical tweak just so it doesn't interfere with Fabio too much. So Fabio's there as well, and you can see what's going on with him as well in this document. So those are documents. This is a warm-up document. I will keep it. Excuse me. That's the mechanics document. This is the warm-up document. I will keep it updated as the day goes on. Again, not expecting too much craziness, but hey, you never know. That's the lovely thing about this thing that we call the stock market. Yes, sir. I might be in the camp of 6 out of 4 traders myself, if we're being honest. So, yeah. So we'll see what happens there. I'll be on the Twitters if anybody wants to come tweet, chirp, whatever you call it, engage in any way. That's my favorite spot. I'll send out the newsletter. You can respond to that, and of course in the comment section of this video. So I appreciate the like. Here comes the plug. That helps with that YouTube algorithm. I guess I am not allowed to stream in Russia or Belarus anymore. I keep getting those notifications. So, hey, I mean, if one of my 9 viewers is reporting me, that's great engagement. I appreciate that too. We'll take whatever engagement we can get. So, like I said, I appreciate that like. That does help with the algorithm. So, I'm gonna go ahead and conclude the video there for today. Hopefully, we'll have some trends sometime this week. You never know; it might even be tomorrow. And I hope that you have a good trading day and stay classy until then.